and then we got through most of Chapter 6. We hit all of the really relevant points in Chapter 6, and at least covered everything that you're going to need for the quiz on Friday and going forward. I'm also going to post online the lecture I did for my summer class for Chapter 6. So if you, I would say basically if you're an accounting major or going into accounting, maybe watch that to see any of the few things that we didn't cover, but I'm not going to spend any more time on Chapter 6 as far as the lecture goes. Okay, this is, like we've done in the past, this is very similar to what the quiz will look like. You walk through a problem like this. I may not have it quite as involved, so it might not consist of this whole thing, because it took me a little longer to do it in my last class than I wanted to have you guys do, just so you have enough time during the quiz to finish it. Basically what we're looking at is we're going to walk through a few transactions for this company, and we're going to look at it in terms of what it looks like if we're using FIFO, if we're using LIFO, and if we're using weighted average costing methods to account for our inventory. Okay. So just to read the little summary there, Watches R Us specializes in excuse me, designer watches and leather goods. They use the perpetual inventory system. We assume that that's the case for everyone anyway. Assume Watches R Us began June holding 10 wristwatches that cost $50 each. So 10 watches at $50 each is our beginning inventory. And then during June we have these few transactions that we're going to keep track of. And what you'll end up seeing is that the transactions look pretty similar when we do the journal entries and when we put them on the inventory sheet for the June 3rd and the June 16th transaction. Okay, those are going to be pretty much identical for all three methods that we're looking at. And then the June 23rd transaction is where we see the big differences between FIFO, LIFO, and weighted average. And then we'll look at those differences to answer the questions in 3 and 4 here. Okay, to find which method gives us the highest gross profit in this scenario, and then which method maximizes net income, and which method minimizes income taxes. Just so that we know as managers, if our goal is to maximize net income, obviously we would choose one method, and if our goal was to minimize income taxes, which different scenarios may have us wanting to do both of those things at different times. So we, just depending on what our situation is what we would choose once we have the information available to us. Okay, so first thing we need to do down here, this is what an inventory sheet will look like, more or less. Okay, so we're going to list purchases that we make, and then we'll list when we sell anything, cost of goods sold there, and then finally we'll keep track of how much inventory we have on hand, and we'll keep track of how much each piece of inventory we have on hand cost us. Okay, that way when we decide which cost to use, we'll have to know how much each piece cost us. So it'll make more sense as we go along. So the first thing we need to do is this question tells us that our starting inventory is 10 watches at $50 each. So we're going to go down here and assume we're going to do FIFO first. But we're going to assume that June 1st, this is what we have in inventory. Okay, 10 watches, $50 each. And of course, our total cost is just going to be the unit cost times the quantity. Okay, so our inventory on hand, if you looked at a T-chart of what our inventory account looked like right now, it would be what's in that last column, $500. Okay, that's what's in our inventory at the beginning of the month. So the first thing we need to do is record how selling 8 units for $100 each, and the amount we sell it for doesn't really matter at this point, but selling 8 units, what that looks like in terms of our inventory. Okay, obviously the amount we sell it for is important to deciding how much revenue we're going to generate from this, but as far as just keeping track of how much is in inventory, we just really need to know how much we sold. Okay, so June 3rd, we sell 8 units. So I'll go down here, June 3rd, and I'm going to be looking at these middle columns here because I'm talking about selling. So how many did I sell? I sold 8. Okay, right now, the only choice I have for how much each unit costs is $50. Okay, that's the only inventory I have in hand, costs $50. So there's no option here. That's why this first entry will look the same for all 3 methods. Okay, because right now it doesn't matter what method you use. Any method you choose, it's still going to be $50 a piece. So our total cost there, $400. 8 times 50. Okay, and then over here, what I want to do is I want to subtract these 8 units from what I have on hand, and that leaves me with 2, and those are the $50 units. Whoops. So I have $100 worth of inventory left. And to show that this is no longer accurate, I'm just going to highlight that. Okay, so that highlighted portion is no longer accurate. What I actually have in inventory is this next line down. Okay, so that's the June 3rd transaction. June 16th, we purchased 10 more units at $56 each. Okay, since we're making purchases here, it's going to be in this first column, or these first 3 columns here, and we're going to record that we purchased 10 units for $56 each. So we have 10, $56 each, for a total of $560. Again, regardless of which method we use, the fact that we make this purchase doesn't change. Okay, how we record the purchases doesn't change no matter which method we use. Okay, remember the methods are only going to change how much we're recording as cost of goods sold and how much is recorded in inventory on hand. Okay, so all I need to do is show over here in the inventory on hand that now I have these 2 older ones that I already had for $50 each, and I also have 10 more new ones that each cost $56. Okay, what I want to do here is I want to make sure that I keep basically these 2 batches recorded on here, because this, the fact that I record them like this, kind of in chronological order from top to bottom, shows me which was the first in or which was the last in. Okay, so if I'm looking at FIFO, I'm looking at first using up the items that were first in my sales costs. If I'm looking at LIFO, I work from the bottom up and use up the batches from the bottom up when I'm doing sales. So that's what we'll look at right here. Okay, the final transaction that we need to record is selling 8 units for $100 each. Again, when we're just talking about the inventory, we don't care how much we sold them for, but we do want to record the fact that we're selling 8 units. Okay, since we're using FIFO, we need to first sell these 2 units. Again, it doesn't matter that we're actually selling those 2 units, but for costing purposes, we're going to say that those are the 2 units right here that we're selling. Okay, so I'm going to first record, well, let me put the date in first. Okay, so under cost of goods sold, I'm first going to record selling 2 units at $50. Okay, that uses up all of my older inventory first. So I'll highlight those 2 units there to show that I have now used those up. But this transaction called for selling 8. So I sell 2 at $50 a piece for my cost side, and then 6 at $56. Okay, so the combined amount of this transaction, cost-wise, is $436. And that leaves me, since I've now used up not all 10 of these, but I've used up 6 of them. So I'll highlight that out. And I'll put down here what I have left, which is 4 units of the $56 batch for $224. Okay. So then if I go and put my totals in, the only total I'm really worried about is the costs here. So total purchasing costs under FIFO was $560. Total cost of goods sold under FIFO was $836, because I'm just adding these down here. So I've got $836. And the total remaining in inventory using the FIFO method was $224. Okay? So those will be the numbers that we compare to the other methods when we do the recording for the other methods. Does everyone understand how I got to these numbers under FIFO? Okay, so this is just a tool that I use. You may, like obviously if you're using a computer system where you just punch in each transaction, it's going to automatically kind of take out the units that you've already used. What I don't want to do is if I leave that unhighlighted, then I don't always know which of those have already been used up. Okay, so if I left that unhighlighted, and obviously with 3 or 4 transactions, it's not a huge deal, but if you have like 50 transactions, and you don't know, okay, like in this case, before I highlighted these two lines together gave me my total, right? But how do I know if I have 50 transactions, which lines go together, what's my remaining balance? So that's just for ease of looking at it right now and knowing, okay, the only thing I have relevant still is this. Okay, so I also could have, instead of highlighting this part here, since I used up 6 of these 10, I could have just changed that to 4 there. It wouldn't really, it's just a matter of preference on how you want to do it. Does that answer your question? Okay. Any other questions? Okay, let's look at the other 2 methods. And like we said, the first part of these other 2 methods is going to look exactly the same. So for my beginning inventory, it's going to look exactly the same. I'm going to start with 10. At $50 each for $500. My June 3rd transaction is going to look exactly the same, where I sell 8 for $50 each, total of $400. And that's still going to leave me with 2 at $50 for $100. At this point is when I highlighted out the top line because that's no longer accurate. And my total is now what's in the second line. Move on to my June 16th transaction, which will also look exactly the same. Purchasing 10 units, $56 a piece, $560 total. And then carrying those units over to show that I have those as inventory on hand. So at this point, if someone asked, okay, what's your total inventory? I would have to add those 2 together, and right now it's $660 worth of inventory. But we'll see quickly that we are going to change that up here. So this is the one that's going to be different. So on June 23rd, I want to record the fact, excuse me, that I'm selling 8 of these. Okay? Since I'm using LIFO, I want to work from the bottom up. So, do I have enough units in this bottom category to sell them all at $56? Yes. Okay? So I'm not even going to dip in. These 2 will just stay like they are. The only thing that's going to go down in my inventory is in this bottom category of $56 stock. Okay? Because I'm working from the bottom up. If I had sold 11 units here, then I would sell all 10 of these and then work up to the next category and sell 1 of the $50 units. But that's not what I'm asked to do. So in this case, I'm selling 8 units. Each one of those is $56. And that is what? $448. Okay? So that basically didn't touch the 2 units at $50 each. I did touch this one. Instead of deleting it, I'm just going to write a new line here. So I have the original 2 for $50, and I have 2 left of the $56 batch. Because of these 10 here, I used 8, leaving 2 left. Okay, so now I ignore the highlighted portions, and I just look at the remaining balance that's non-highlighted. So if I look at my total here, it's a total of $212 left in inventory. Total up to the cost of goods sold is $848. And total cost of purchases stays the same, $560. Okay, so comparing these two, FIFO and LIFO, you see total cost of goods sold under FIFO is $836, but it's $848 under LIFO. So it's a $12 difference. And then if you compare inventory, also a $12 difference. Okay, but it's reversed. So cost of goods sold is lower by $12 here, and inventory is $12 higher here. Okay, so whatever the difference is between one, you just know that instead of charging that amount to cost of goods sold, under the FIFO method, that cost is still captured within the inventory on hand account. Under LIFO, it's not captured in inventory because we've added it into cost of goods sold. If we sell all of the inventory that we have and it's all gone, under all 3 of the methods, the bottom line totals will be exactly the same. Okay? So the only difference is when we still have inventory on hand, that's going to be valued differently under each method, and our cost of goods sold will be valued differently. Once we sell it all off, it doesn't matter because it all equals out to the same in the end. That's why there's 3 different methods that are acceptable under GAAP, because you're really not changing the bottom line figures at all. Our costs stay the same. We're just really changing the timing of when we recognize cost of goods sold and the timing that we value the inventory on hand differently. So weighted average is just going to show us basically something in between the 2 that we already looked at. And again, the first 3 transactions are going to look exactly the same. So I'll just quickly go through those. Start with 10 $50 units for a total of 500. On June 3rd, we sell 8 of those. For 400. We're left with 2 at $50 and 100. I'll highlight that out. Whoops, not all of that. And I'll move on to the 16th, which again looks exactly the same. We buy 10 units, $56 each, total $560. Carry that balance over here to show, whoops, everything that we have on hand. Okay, and again, this is now where we're going to get a little bit different. Okay, so as soon as we have inventory in stock that has 2 different values, under the weighted average method, before we make any sales, we need to average those out. Okay, so in our pool of inventory, under weighted average, we can't have 2 different costs. We need to find the average of those and use that as the unit cost. So to do that, all I have to do is add up total costs and divide that by the total quantity. Okay, so right now I have a total cost of inventory of $660. So I'm going to do equals 660 divided by total number of units, 12. And my average cost right now is $55 a unit. Okay, so what I'm going to do is I'm going to highlight these 2 out. Oops. To show that that's not the relevant amount anymore. I want to show 12 units each with an average cost of $55, totaling to $660. Okay, that's my new unit cost right now under weighted average. So when I sell my final 8 units on the 23rd, we have 8 units. Unit cost is $55 for a total of $440. Okay? Does everybody see how I got the weighted average? Simply just adding up the total cost, dividing by the total quantity, and then replacing our unit cost by whatever the average was, and making sure that I'm using the total quantity. Okay, some people will often make the mistake of they'll get this number right, and then they'll just carry down the 10 instead of adding both of those units together and saying we have a total of 12 units at $55. Okay, so if we look at the bottom line totals here, what we expect to see is something in between LIFO and FIFO. So we have $840 for total cost of goods sold. Wait, that's not right. I forgot to take out what we've already used here. Okay, so we sold 8. We need to take 8 out of these 12, leaving us with 4 at 55 each, or $220. And I'll highlight that out. Now when I carry down my total inventory on hand, I have $220 here. Costs stay the same at $560. And so $220 inventory on hand should be between LIFO and FIFO. It is. It's between $224 and $212. Cost of goods sold should be in between $836 and $848. It is. And total costs stay the same. But just like with the other two, if I sell off all my inventory, these will equal out. And all 3 methods will be equal. Okay? So to answer our question 3 and 4 here, if you remember how to compute gross profit, it's just total sales revenue minus cost of goods sold. Okay? So the sales revenue is equal for all 3 of these. Oh, we need to do the journals too. Sorry, I forgot about that. That'll make it easier to see where the revenue comes in. So the journal entries for the first 3 transactions are going to be, or the first 2 transactions are going to be the same for all 3 items. Okay, so we're going to assume that the inventory on hand that we started with, 10 units at $50 each, since that's already in hand, we don't need to do a journal entry for that. Whenever we got that inventory last month or whenever it was, that's when we did the original journal entry for that. All we need to do journal entries for is the transactions that took place in the month of June. Okay, so first transaction in the month of June happens on June 3rd. And that is this sale for 8 units. The question tells us up here that we're selling, both times we make sales, they're for $100 each for each unit. So I need to record 8 units being sold at $100 each. Okay, here we go. So I have 2 components of this journal entry. I have the component that shows me what I'm making in revenue, and I have the component that shows me how that's affecting my inventory. Okay, so the question instructions tell us that cash is not involved at all in this transaction. Any sales we make are accounts receivable, and any purchases we make are accounts payable. Okay, that's in the instructions. So when we make a sale, it's going to go to accounts receivable for $800 because it's 8 units at $100 each. The credit is going to be to sales revenue for the first entry. Okay, this should look very familiar to you. We've seen these entries many times now. Okay, the other side of that entry is going to be a debit to cost of goods sold and a credit to merchandise inventory. And we said for all three transactions, that first cost of goods sold is exactly the same. It's $400 for each one. So we'll just put 400 in there. That's our June 3rd journal entry. Okay? So far we have $800 of sales revenue. Then, on June 16th, we make a purchase. So our inventory account goes up by the amount of this purchase, $560. Since we're not using cash, we're going to credit accounts payable for that amount. And it's the same for all three, FIFO, LIFO, weighted average. So far, no differences. Okay, the only differences comes in the last set of journal entries. So, 23rd of June. Again, we're going to have two components. One that shows the sales revenue, one that shows the effect on merchandise inventory. The first part's going to look exactly the same as our June 3rd transaction because we did the same sale. We did 8 units for $100 each. That's shown to us right here. So, first component, exactly the same as it was for June 3rd. Debit accounts receivable, $800. Credit sales revenue, $800. Okay, so far we have $1,600 worth of revenue. Now, the other side of this that shows us how we're keeping track of cost of goods sold and inventory, that's what changes for the various transactions. So I'll label each one when we write it out here. So we're still going to have the same format that we did up here in June 3rd. Debit cost of goods sold. Credit merchandise inventory. Okay, that template's going to be the same for each of these three. This is just showing us that this first one's for FIFO. So all I have to do is really look up at this inventory sheet I filled out and look right here for how much my cost of goods sold was on this transaction. 100 plus 336, so 436 will be the amount. Okay, so that's for FIFO. Now we'll do the same thing for the other two. So for LIFO, again, I'm just looking up at the inventory sheet. This is the relevant transaction, June 23rd. Sell 8 units at a cost of $56 each for $448. So $448 is the amount that I need to use. And I'll label that one LIFO. And then finally, we've got, the amount for weighted average. I look up at my weighted average inventory sheet, look at the transaction that I need, 8 units, $55 each, total cost $440. So $440 is what I use there. Okay, and those are my journal entries for each method. Okay, just to be clear, this component of the bottom entry, we're just assuming for sake of time here that I did that same accounts receivable sales revenue for each of these three. Okay, I just didn't write it out again because it's exactly the same. And the only thing that I changed up was the second half of that journal entry, the cost of goods sold, merchandise inventory, and we labeled it FIFO, LIFO, and then I'll label this one weighted average. Any questions on how we did the journal entries? Like I said, the templates for all of these are exactly the same. Only thing that we really change based on the method is the amounts. And really for this one, only the amounts in the very last component of the very last transaction. Okay. So again, like I said, calculating gross profit for each one. We got FIFO, LIFO, weighted average is just net revenue minus cost of goods sold. Okay, so for FIFO, for all of these, our net sales revenue is $1,600. Because if you look at these journal entries, we only had 2 journal entries that talked about sales revenue, one here for $800, one here for $800. Okay, remember net sales revenue usually means we've already taken out allowances for returns and damaged goods, that kind of thing. In this scenario, we didn't have any of those. Okay, so in this scenario, net revenue is the same as just gross sales revenue. All we had to do was look at how much revenue we had, didn't have to take anything out of that, and now we're just going to look at cost of goods sold for each of these items. Okay, so for FIFO, our cost of goods sold was right here, $836. So my gross profit, that over here, is just net revenue minus cost of goods sold. So my gross profit there for FIFO, $764. Cost of goods sold for LIFO, $848. Okay, so my gross profit for LIFO, $752. My equation is just the same, 1,600 minus 848. And then weighted average, cost of goods sold, right there, 840. And gross profit, 760. So this is what we would expect. If we have lower cost of goods sold, we're going to have higher gross profit, and in turn, higher net income. So that's what question 3 is asking here, or 4. Which method maximizes net income? Well, the method that has the highest gross profit maximizes net income. So that's FIFO followed by weighted average followed by LIFO. Okay, the opposite is true for which one minimizes income tax. Because the higher income you have, the higher your tax is. Okay, so we then, which one minimizes income tax? The lowest gross profit. So LIFO followed by weighted average followed by FIFO. Any questions on how we did any of those? Like I said, the quiz will look very similar to that on Friday. In here, bring your computer. Anyone have any questions over this chapter so far? Or anything else? Okay, see you on Friday.